Hey traders, welcome back. This is the second video of our 10-part series where I will reveal simple yet powerful strategies tailored towards trading the Nasdaq and the micro Nasdaq futures markets. And again, the best part of all of these strategies are that they're accessible to everyone from beginners to your more professional traders. Watch as I reveal easy to follow trading methods that you can start using right away without wasting your time hunting for opportunities every single day. For my second strategy, I would like to show you how I trade the Nasdaq using our real-time supply and demand indicator, which basically identifies areas where supply and demand are out of balance by calculating imbalance in volume, blocks of volume, and order flow activity. Now, I've got this indicator loaded on a 5-minute and a 1-minute time frame, and on my 5-minute, I've also got a trend detector. So if price were to be above that trend detector line, it turns blue. I only want to take long setups from within demand zones. And if it's below the trend detector, it turns red. I only want to take shorts from supply zones. So the first step is to go and see how close price is to a current demand zone. And you can see that on this day, there was one quite far away from price to the downside, and it was about 108 ticks wide. So the next thing I want to see is if there is a demand zone on the 1-minute time frame within the higher time frames demand zone. And you can see that there was one actually 40 ticks wide. So for me to take a trade, I would need to see price move all the way to the downside, touch that lower time frames demand zone, and then attempt to get into a trade. Right, so at that stage, price started moving to the upside and was pretty far away from that lower zone. But moments later, around about the 1 p.m. mark, a new demand zone printed on the 5-minute. Then again went ahead, marked the upper and lower areas with a rectangle on the 5-minute, and you can see on the 1-minute that we had a smaller time frame demand zone sort of at the upper end and one at the lower end of the high time frames demand zone. Right, so the next thing how I basically decide if I want to trade or get into a trade is to figure out what my overall risk might be. So if price were to pull into that upper demand zone, the risk would have been too much. So for me, I would have been comfortable if price were to pull back into that demand zone. Again, this lower time frames demand zone, which was at the bottom end of the higher time frames demand zone, if that makes sense. All right, but in this case, price shot up to the upside. I thought I was going to get or miss that trade, but eventually price moved downwards again, and I like trading with 2 contracts. I placed a buy limit order for 2 contracts at the upper end of the lower time frames demand zone, and it wasn't too long until I eventually got filled. And as soon as that happened, I trailed my stop loss to below the lower end of the zone, pulled my targets a little bit out of the way, got my risk reward meter out, figure out what distance was from my entry to my stop loss, drag my first target to a 1-to-1 ratio, and my second target to the upper end of the most recent swing high, which in this case would have offered a 1-to-5 reward ratio, which is a really, really good ratio to see for a day trade. Right, and what I like doing as soon as price reaches my 1-to-1 target, I then reduce my risk on my remaining position. And as price then proceeded to the upside, I like to start trailing my stop higher as well. All right, and then in this scenario, I just used a price structure, i.e. higher lows, to trail my stop as price made its way all the way back to the upside again. And I was really hopeful that price would take out that recent swing high. There was even a demand zone that printed on the 1-minute again. I trailed to below that. And it wasn't until I think about 20 minutes later, not too long in this trade, that my second target was filled. And overall, this trade yielded just over $1,000 in about 20 minutes time, which was a really, really nice trade. A very simple strategy that anyone can use, and just using a higher time frame and a lower time frame, and basically seeing if there's an overlap or confluence between 2 demand zones. I then entered into a trade. Was very patient waiting for a setup, but once it did occur, it yielded a very, very nice profit. And that's a wrap for today's second strategy video. If you want to see the remaining strategies in the series, then don't forget to subscribe to this channel and hit the notification bell. That way you'll never miss out on any of our upcoming videos. Also, if you enjoyed this tool I used today, which is the real-time supply and demand indicator, you can actually get your hands on it for free by joining our free Indicator of the Month Club. I'll drop a link down in the description of the video, so please go and check it out. Thanks for watching, and until next time, happy trading.